Hey, what's up, guys? rayBar with another market update. Tomorrow's July 4th, so the market is closing early today in roughly about an hour from my time. We got a ton to go over today. If you guys are here, smash the like button, subscribe if you haven't already, and let's get into it. So I'm going to start out with food inflation right now. Isn't expected to come down anytime soon. Over the last couple of years, post-COVID, with supply chain hiccups, etc., we've experienced a lot of inflation. The Fed has been increasing interest rates to combat that, but it seems that, inflation has been sticky, but also jobs hasn't been cooperating, right? What you're seeing right now is you're seeing a broad level of people that have jobs that are actually paying on average, 1 to 3% more than historical averages, right? What happens when that happens, right? Not only did we spend so much money during the height of the pandemic and the year thereafter, but people are making, air quotes, making more money than they ever have historically in terms of real dollars, right? And what happens when people have more money? They spend more. So yes, things are more expensive, but people are making more, therefore spending more. It's kind of a brutal cycle, to be honest with you. I think until we see a slowdown in jobs, we're not going to have the target inflation rate come down. You may see headline inflation continue to dwindle slightly month over month, and maybe even by next year. But I still think we have a long road ahead of us, right? With that said, if you look at the stock market, here we are, today, up only about $21, about less than 25 basis points. For the week, 3%. For the month, 5%. For 3 months, almost 8%. And then for the year, we're up 13%, right? I think my portfolio is a good indicator of the general market average, given that, the majority of my shares are held in VOO. The last year performance, 18%, right? So 18% is up pretty dramatically, I would say. I think, I am a perma bull, so to speak. I think that buying consistently over time is the best way to build your wealth, right? Bet on America. And it's perfect because we're coming into the 4th of July weekend, right? In 10 years' time, the S&P 500 index, VOO, will be more than it is today. The big companies like Microsoft, they will be bigger in 10 years than they are today. Apple, just hit $3 trillion. $3 trillion. If you think about that in perspective, I think that's larger than the entire British economy, which is wild, right? So multiple things like that are coming into play. You're seeing small caps, right? AUR, and, I guess ORGN, things like that, SoFi. Typically, they are going to be the leaders whenever you enter back into a bull market. You're going to see the small and the mid-cap stocks take off first. I don't know if we're necessarily seeing that right now. The market, to me, is being held up by the big players, Apple, Microsoft, Tesla, and Meta, right? So, which leads me into Tesla, right? I think what you're seeing in Tesla right now is, they did a huge cost-cutting initiative, and I think that with that, we're seeing the benefits, right? Not only do they cut cost, but their deliveries are up. I think, what was it? Look at this. Less than 3 months ago, they're in like the mid 100s, and here we are at 261. So that's almost 80% up. Is that sustainable? I don't know. If you look at the technicals on a lot of the stocks, and when I say technicals, I'm talking the 50-day moving average, the 200-day moving average, etc. A lot of stocks are trending above that, right? And the thing about technical analysis is a lot of times people will think, oh, okay, well, I don't really understand the technicals. But if you really think about it, technical analysis is essentially just probability. And that's why if you look at a lot of Wall Street firms, they hire statisticians, people with statistics degrees and mathematical degrees, because it's all about probability, right? And obviously, we can separate from reality at times where the stock market is just exploding, right? And I think you see things like that in Tesla, right? Why is it up 80%, 80%, right, in the last 3 months? I mean, yeah, maybe it's cost cutting. Maybe it's they're making more money. Maybe their deliveries are better than expected. But let's really think about this, right? With the way the economy's going, everyone's saying we're headed into recession, et cetera. Why are these stocks going up? I think you're seeing a shift where people are starting to think, oh, they turned from uh-oh or oh no to FOMO, right? And I think that's the danger we're seeing right now is the markets are a bit frothy, in my opinion, only because, again, people start to pile in once they see, oh my God, Tesla's up 80%. And then what they end up doing is they're buying, right here when it's already run up, right? And that's why, again, it goes back to what I said earlier in the video, dollar cost average. Pick your winners and buy into those companies regularly. If you see here, I have, reoccurring investments, and I've lowered it down to about $1 per day in almost every stock, and then $5 per day in the S&P 500. I randomly will buy additional shares, additional dollars in these stocks, but every single day I am buying. And you don't have to do that. You can do weekly, monthly, whatever it is, but the key point here is continuously buy, because continuously buying is the only way that you're going to look back and be like, wow, I'm so glad I did that. If you guys don't have a stock account, down in the description, I have a affiliate link where you can sign up for Robinhood, and we both get a little bit of free shares. It would really help out the channel, and I'd really appreciate the support. But if not, just tuning in, smashing the like button, that's enough for me. Outside of that, I didn't have too much today. I sold some options. I sold a SoFi covered call at $9.50 I have an average cost of $9 right now. It's only air quoted $9 because I sold a cash secured put to get assigned the shares, and I got a 38 cent credit, or $38 credit, which is basically 38 cents off. So really, my average cost is hovering really close to like $8.70, give or take. But I went ahead and sold at the 950 strike just to kind of avoid it, because I would like to hang on to SoFi. I feel like that's going to be a real winner as we see student loans kind of come back, where people are going to have to start paying again. And with that, there's going to be a lot of refinancing opportunities, etc. So I think SoFi is going to be a real winner here in the near future. Financial stocks have been beat up, I would say, over the last couple of years, but you have Visa right here, ticker symbol V. I think that they are a huge player. They basically have a duopoly with MasterCard. You're seeing, the fintechs, the PayPals of the world, the WeChats and all that kind of stuff, I guess, or WePay, whatever they call it, kind of taking over. But honestly, things like Visa are so entrenched. I think they have a massive moat where they will be here long into the future. Anyways, guys, I really hope that you enjoyed the video. If you're still here right now, comment hot dog or hamburger, because that's what I'm going to enjoy tomorrow on 4th of July. God bless America. Hope you guys have a wonderful rest of the week.